foreign ESOP vested this year, or before you file your ITR, watch this. One small mistake could lead to filing the wrong return. Welcome back to Deadline to Refund, the income tax series by NeethuOnStage. Hey, I'm Neethu Vijayakumar, a finance enthusiast helping you simplify taxes and personal finance. While working on a client's income tax return recently, I came across a very interesting question. The client had received foreign ESOP employee stock option plans and it raised two important questions. Should the taxpayer file ITR-1 or ITR-2, and should those foreign shares be disclosed in Schedule FA? If you work in a multinational company or receive foreign ESOPs, this video is for you. Before we jump into tax filing, let's quickly understand what an ESOP is. ESOP stands for Employee Stock Ownership Plan or Employee Stock Option Plan. Many multinational companies reward employees by giving company shares as part of their compensation. So some companies issue ESOPs while others grant RSUs or restricted stock units. For simplicity, I will use the term ESOP throughout this video because that's what most people are familiar with. So typically, the company grants the award, the shares vest after a specified period. The value at vesting is generally taxed as salary, and in many cases, some shares are automatically withheld to pay taxes. Now, let's understand Schedule F. FA stands for Foreign Assets. Schedule FA is disclosure schedule in income tax return where eligible taxpayers report assets located outside India. This may include foreign bank accounts, foreign company shares or ESOPs, foreign mutual funds, foreign partnership interest, foreign trust, foreign immovable property, and other specified foreign financial assets. One important thing to remember is that Schedule FA is only for disclosure. It doesn't automatically mean you will pay any additional tax. Its purpose is to provide information about the foreign asset to the income tax department. Okay. So, the Schedule FA is generally applicable only to the resident and ordinary resident taxpayers. Now, let me tell you about the case I handled. The taxpayer was a resident and ordinary resident. The foreign ESOP vested on around March, in the month of March 2026. Okay, the employer had already included the ESOP value in Form 16 and tax had already been deducted. The taxpayer's question was, should I disclose these foreign shares in Schedule FA while filing assessment year 26-27? At first glance, most people immediately say, yes, we should disclose. After all, the shares were received during the financial year 25-26. Okay, but here is where many taxpayers get confused. Most parts of the income tax return are based on financial year. Schedule FA foreign assets is different. Schedule FA follows the calendar year. For assessment year 26-27, Schedule FA covers the period from 1st Jan 2025 to 31st December 2025. Now look at this example. Okay, the ESOP vested on March 2026. Okay, so as it falls within the financial year 25-26. But it does not fall within the calendar year 25. So, although the foreign shares were received during the financial year, they were not held during the calendar year covered by the Schedule of Foreign Assets for assessment year 26-27. So, this is exactly why many taxpayers get confused while filing their returns. Now comes another important question. If Schedule FA is not reportable this year, can I simply file ITR-1? No, you cannot do that. The choice of correct ITR form and the requirement to report Schedule FA are two separate issues. If you have acquired a foreign financial asset during the financial year, ITR-2 may be an appropriate return depending on your facts and eligibility, even if Schedule FA is not reportable for that assessment year. So, never decide your ITR form just because Schedule FA happens to be blank. The key takeaway is very simple. If you have received foreign ESOP, first determine whether you have acquired a foreign financial asset. Second, choose the correct ITR form based on your eligibility. And the third, always check the Schedule FA reporting period carefully because it follows the calendar year, not the financial year. This So this video is for educational purposes, and the correct ITR form and foreign asset reporting depend purely on your residential status, the nature of your foreign assets, and the applicable income tax provisions and ITR instructions. So it may vary according to your situation. So consult a qualified tax professional before proceeding further. If you found this video helpful, save it for future reference and share it with your friends and colleagues working in multinational companies. Follow NeethuOnStage for more such practical tax tips. Don't forget to subscribe. This is part of our playlist Deadline to Refund Income Tax series, and where we simplify every step of income tax filing from deadline to refund. So don't just earn money, master it. See you tomorrow. Bye bye.